Welcome to Zenith's latest Meet the Manager series. I'm Dugald Higgins. In today's series, we'll be talking about the Warakirri Ethical Australian Equities Fund, and joining me is the fund's portfolio manager, Richard Maynier. Richard, thanks for joining us.
Thanks, Doug. Great to be here.
Let's start with Northcape Capital. Can you give us a quick overview of the business and particularly the Australian equities capabilities?
Absolutely. So we're an independent fund manager. We're based in Sydney and Melbourne. We were established in 2005, so we're coming up to 20 years now. These days we manage $14 billion in equities strategies. About half of that is in Australian equities and about half in international. It would probably help if I told you the story of the founding of Northcape. So back in 2004, four portfolio managers came together who'd had long careers at large institutions, and they were pretty burnt out by institutional asset management and just thought there's got to be a better way to set up a funds management business. If we could get rid of the bureaucracy, the politics, the investment committee, we could start a firm that attracted people who were passionate about investment and just create an environment for them to do that. And that's been very successful. So we have four portfolio managers to this day and a very flat structure. The business is 100% owned by the staff. We're very much aligned with clients, and our staff turnover has been very low. We think we've been able to attract some very good people to Northcape, and the average experience of the team is very long. I've been there for 16 years. Two of the co-founders are still with the business, and our other colleague has been with us almost 15 years.
Great. Can we quickly touch on the nature of the Warakirri relationship?
Yes, so most of our clients are large institutions, and many of them have been with us for a long time. We've had some clients that have been with us for the full 20 years that we've been going. And we've had a relationship with Warakirri since we first started, but that relationship has evolved over time. So initially we were managing part of a multi-manager strategy for them. In 2020, we entered the retail market for the first time, and that's when we became the manager of the Warakirri Australian Ethical Fund. So prior to that time, that fund was managed by other managers, but we've been running it for 4 years, and we manage it very much in line with the way we run our core strategy, which has been going for the full 20 years, but with an ethical overlay, which Warakirri contributes to.
Moving on to the philosophy of the fund, what are the key tenets of the process and how does that tie into the fund strategy?
Yeah, we're long-term investors, and so what we're looking for is businesses that have some sort of competitive advantage and an ability to grow, and ideally a business that is a little bit misunderstood by the market, which gives us an opportunity to get set. So quality means different things to different people. We would describe ourselves as quality-focused investors. And what we mean by that is basically competitive advantage and some ability to grow. So if we think about a business that everyone would be familiar with, like Cochlear, you have a business with very high barriers to entry. They've got a 70% market share globally, and they're just consistently growing into a large addressable market. So you can be confident that in 10 years' time, the sales volume of that business will just consistently grow over that period. They're very profitable, they pay dividends. So a company like that, the share price can go up and down for a range of reasons over the course of a year, but in 5 years' time, the business is going to be substantially larger than it is today. And the profits are going to be higher, the dividends are going to be higher. So we think if you can have a portfolio of businesses like that, in a perfect scenario, you'd have 20 to 30 businesses, similar characteristics, all in different industries, so they're not correlated with each other. If you can construct a portfolio like that, you're going to do well over time. And so our job is basically to identify these companies and then make sure that we're getting them for a good price. And there are a lot of ways that you can go about that. These days you can buy an ETF that will invest in quality businesses, but how do you identify a quality business? And for us, we think our value add is judgment. So all of our investment process, ESG, everything comes down to human judgment, and that becomes possible when you have a very experienced investment team who's been working together for a long time.
So moving on to the ESG piece then. So Northcape has had a strong focus on ESG as part of the standard process. So when you think about responsible investing, how do you think about that in the context of the fund and how that works with Warakirri's ethical overlay into the process?
Well, ESG is a really natural fit for us, and I think it is for any long-term investor. I think the only people who don't have to worry about ESG these days are either passive investors or investors with a very short time horizon. If you're investing for the long term, you want companies whose business model is sustainable, and you need them to be acting ethically and creating win-wins for their customers and their shareholders. There's no doubt about it. And so, we have a two-step ESG process. We exclude some companies entirely, and then with companies that we do own, we have a process of engaging with them and sort of managing ongoing risks. If we think about the exclusions, that's a natural part of what we do. Again, we're looking for the best businesses. A big part of our investment returns over time have come from avoiding businesses who have the most problems, and filtering out ESG issues is a part of that. And then when we look at the Warakirri Ethical Fund, this fund is an ethical fund in particular, and we have an additional list of companies that we screen out because they don't meet the ethical requirements of the fund. And Warakirri takes care of that for us.
So thinking about the fact that obviously Northcape runs other strategies without the ethical overlay, how does having that ethical overlay still actually maybe inform how you look at companies and how the process works in the other strategies?
Well, it's a really good way to structure an ethical strategy, I think. All of our strategies have a solid ESG foundation. We're screening out companies that are doing things that are unsustainable and that have a risk profile that is unacceptable to us. So that's across the board. And then a process of engagement is ongoing. That's in all the strategies. The difference with the ethical fund is that we also screen out companies that don't meet the client's ethical requirements. So that includes things like alcohol, gambling, coal seam gas, things of that nature. So it's just a way of making sure the client gets a portfolio that they're comfortable with. Now, this is not a large proportion of the market, so we still deliver investment returns in line with our core strategy, albeit there'll be differences from time to time. We just screen out like a few companies at the margins.
Excellent. So when you think about the investment process, you guys talk about, okay, you focus on high quality companies, above average growth, high returns on equity. So when you think about ESG in the process, the ethical overlay, what does that mean really for the opportunity set that you're looking at, and how does it maybe influence the investment style of the fund?
It's a natural fit. Yeah, I mean, as I was saying, we need to find companies who have sustainable business models. And the market's approach to ESG has evolved a lot over the last 20 years, but the way we look at companies has been pretty similar. We've always looked to screen out companies that have an unacceptable risk profile, and that continues to this day.
Excellent. So moving on to the engagement piece, obviously engagement's part of what you do, and you also have engagement in this strategy, but also for the other strategies. So how does it work for this fund, and how does that fit in with the broader Northcape business?
Yeah, engagement is important for any fund manager, and if you're a fund of a reasonable size, you'll get lots of opportunities to engage with the companies that you invest in, both at the management level and with the board. My opinion is that engagement should really be mostly about learning. When you talk to a company, I think investors should be asking questions and listening to the answers and trying to understand the company's operations and how things work from their perspective. I think the idea of going into a company with a list of 10 things that they should be doing differently is not ideal for an investor. Having said that, sometimes the answers that you get are not satisfactory, and sometimes the company may be operating in a way that you're not happy with. It may be to do with their carbon targets. It could be the way they're treating their customers, or on the governance side, most obviously, it could be the incentives in the executive remuneration or the composition of the board. All companies have some sorts of issues. And I think in those cases, there's an opportunity for us to talk to the company and try to drive some improvement. The key to that sort of engagement is to be selective. I don't think you want to go to every company in the portfolio and give them a list of things that you'd like them to be doing. But what you can do is identify areas where you can make a difference and you can focus in on an issue and try to drive some improvement. The best example would have to be in managing the carbon footprint of the portfolio. If your investors are concerned about their carbon footprint, you don't want to engage with every company that you invest in. You want to find the companies that are producing the most carbon and establish what is their pathway to get to net zero and to operate within an energy transition. And if they're not doing enough, then we can, engage with them and try to provide some ideas.
Sure. Thinking about all we've said, and the nature of how the investment process works, what sort of markets do you think that the fund is naturally going to be best aligned to perform well in, and maybe what are some of the market types where perhaps it might struggle a bit?
So we try to diversify. Our goal is to do well in a range of market conditions, and if we look at our performance over time, it has been reasonably consistent. So the way to do that is to try to find good businesses within a range of different sectors. Now that's not always easy. So some sectors are naturally predisposed to have a lot of good businesses, and the healthcare is one example of that. And some industries, it's quite difficult to find businesses that really meet our criteria for barriers to entry, good return on capital and growth. And one area we struggle with a little bit is the commodities space. We struggle to find companies that meet our criteria. We do have some investments there. We have found some excellent companies in that space. But I'd say the market environment that we struggle with is one where there's a big tear in commodities prices. Maybe our fund doesn't keep up with that. But the environment where we do relatively well is a weaker market.
Yeah.
So if we go back to the GFC, the fund outperformed because we didn't own the companies which had over-leveraged balance sheets and got into trouble and blew up. COVID was a little bit different. In COVID, very few companies went bust. And within a year, the market was back at all-time highs. Everyone got bailed out. So that was a bit of a different cycle. But then a year or so after that, as interest rates increased, business model challenges came to the fore and we started outperforming again. So we tend to do better in weaker markets, which is what you'd expect of a quality strategy, and maybe struggle with certain cyclical conditions.
Yeah.
But I think falling behind in a cyclical upswing is a lesser problem than destroying your capital in a downturn. And so I think that's actually quite a nice mix to have.
Yeah. Excellent. Well, we could talk investing all day, but unfortunately I think we're out of time. Thanks very much for joining us.
Thank you.
And to our viewers, that wraps up today's session on the Warakirri Ethical Australian Equities Fund. As always, we hope you find these series of value. For further information, visit us at zenithpartners.com.au. Thanks for watching.